All right, so we're moving into the 1099H. What is this one? This is, again, a newer 1099 form, relatively speaking. It came about, it is for health care coverage tax credit advance payments. So the instruction on what this form is, it's health care tax credit. So this came about as part of the Affordable Care Act. But because you'll notice there's no red line form here, it's due to low volumes of these forms. We are allowed to file, again, a paper copy with the IRS as well as the individual, the recipient. So that's a little bit of a nicety there. What it is it's provided because the recipient, the individual, received a health care coverage tax credit advance payment on their health care insurance premiums. The advance payments were forwarded directly to the insurance provider. So this is somebody that got their insurance through the exchange and is getting that a credit. They are qualified to receive those payments because it was an eligible trade adjustment assistance recipient, an alternative recipient. So that's what you'll see in the instructions, a lot of these weird little abbreviations, TAAs and RTAs and a whole lot of things that go with that. But basically, you want to look at the healthcare coverage tax credit, the form 8885, or its instructions about, who's qualified recipients and how to figure any credit on there. But if somebody's receiving advanced payments, this is the form that should be sent. So if you're working with somebody, maybe an insurance provider who's getting the money, or in some way that you have to report those advance payments, this is what you use. For the most part, we're seeing it from the other side. We're seeing it from the recipient side. Maybe they receive these forms so that we know, what's going on with them. Box 1 is going to be the total amount of the health care tax credit, or HCTC is how it's abbreviated everywhere. The total amount of those advance payments for qualified health insurance costs made on their behalf. So it's the person's never really seeing it. It's just going right to the insurance company. Box 2 shows the number of months they received those health care or health coverage tax credit advance payments. In 3 through 14, it's going through, it has like the same idea like the 1099K, where it's listed by month separately, January through December, but then you have the total up above in box 1. So that's kind of the layout of how these work. So it's really, if you're having to report it, it's very straightforward as long as you break it by month, and the month's total box 1 and the number of months that the payments are received are in box 2. This one's pretty straightforward in the reporting itself. As we look at another one, 1099 LTC, again, low volumes mean this one can be filed with just the online fillable version. You don't have to use the red line form for that either. So payer and policy holder is the terminology in this one. So the person issuing it is the payer. The policy holder is the one who is the one receiving this form. As we look at, this one has a little bit different format in the instructions, because you have some instructions for the payer, you have a little bit of some instructions for the insured, and you have some instructions for the policyholder. So each of the different copies also changes that terminology real subtly there. So these have to deal with long-term care insurance contracts. Generally, amounts received under a qualified long-term care insurance contract are excluded from the person's income, but it talks about, is it made on a per diem basis? Then their exclusion is limited. So here's why it wants to know, okay, was this done on a per diem basis? Was this a reimbursed account? What were these amounts paid in? So this is something that often it's the insurance companies that are dealing with. But if you are the policy holder, it's good to know, what is all the things in this box for. If you look at a lot of the straightforward things, the tax ID number of the policyholder should match their name, etc. Then box 1 is gross benefits paid under that long-term care insurance contract. Box 2, the accelerated death benefits paid during the year. And if there's an amount in 1 or 2 that was paid on a per diem basis or was reimbursement of actual expenses, then that's what those are telling. It's just they're further defining boxes 1 and 2. If it is that the insured was terminally ill, the box may not be checked. If there are benefits from a qualified long-term care insurance contract, that will be a checkbox here. Qualified contract, it's optional as far as the checkbox here. And if they're chronically ill or terminally ill, that's also optional, but you can fill that out for box 5 and date certified. So, and this is where you see policyholder and payer is kind of our usual thing, but here we have additional name and ID number and address. So this is one of the 1099s that's unusual in that sense because it has all 3 listed on the same form. So it kind of is over into the side where we normally have, it's normally numbers. This is also going to be a whole different ID and address potentially in there. So a little bit different on those 1099 LTCs. The 1099R, well, we'll probably see a lot of these, especially if you deal with retirees in, the tax preparation practice. But this one I also had, if you remember way back when, I also mentioned that there's a 5498 that's kind of a similar type of reporting one. This is dealing with the income. The other is, we're going the wrong way there. The other is dealing with the amounts of the value of the account. So that's the 5498. The 1099R is a distribution from, if you look at, again, it has kind of a pretty lengthy title, distribution from pensions, annuities, retirement, or profit-sharing plans, IRAs, proceeds from insurance contracts, etc. I love that the title itself says etc. And the 5490 is IRA contribution information. So lots to do in this one. The payer and the recipient, that just follows kind of our normal logic there. All this in here as we go, we can find box 4, federal income tax withheld, at least something that's familiar across all the different ones. As we look at what each of the separate ones are for, this one has certainly a lot more specifics to it because there is so many different types of plans. So, there's a lot that we can go into on this. I would certainly recommend if you have to fill out one of these to send to a recipient that you pull the instructions and look very specifically in there. But a lot of them, there's the FATCA filing requirement checkbox, account number. That just helps to, differentiate, especially if there's more than one that recipient has from that particular payer. The box 1 is the total amount received during the year, and it could be all these various things that could happen: a direct rollover, transfer, conversion of a Roth IRA, recharacterized plan, or non-periodic payments or a distribution. All these different types of distributions may show up in here. As we look at 2A, this part of the distribution is generally taxable. If there's no entry, it means that maybe you don't have all the facts, and it really then puts that burden on the person receiving this to determine how much is taxable. But if you're preparing the form and you know how much of that is supposed to be taxable, that goes into 2A instead there. So there is certainly a lot that goes into just calculating this one. If you look at, there's even a box here saying they couldn't really determine whether it is taxable or not, or they couldn't determine what amount. It's a checkbox. If it's a total distribution, that's to be checked over in this area. If there is capital gain amounts included in box 2A, then that's listed here separately. As you look at, box 5, generally that's the employee's investment in the contract, like after-tax contributions basically. If any recovered tax-free from the year, the portion that's the basis is maybe if it's a designated Roth account, part of premiums paid on commercial annuities. So there's a lot that can go into box 5 as well. For 6, if it's a lump sum distribution from a qualified plan that includes securities of the employer's company, net unrealized appreciation. So there's a lot of other types of things that can be in box 6. 7, this is all based on numbers and letters. So there's codes that this is where you especially want to go to the instructions to get the right code for there. The codes identify the distribution received. So let's just say a common one, maybe you're C number 7. That means normal distribution. If it is that you have a box 1, it's an early distribution and there's no exception known. Maybe in most cases it's for somebody under age 59 and a half. 3 would be for disability. Each of these little codes in there tells a story of what it is. So number 4 for death distribution. If it's connected to being IRA separate symbol plan, it has the checkbox over right beside it. And there's a big, huge handful of different code letters, and that's where you want to go to instructions to get the right one in there. As we continue on for the rest of these, a lot of them are pretty simple. If you have annuity contract as part of distribution, value of the contract shown. So A, it says other, but this is more, if it is an annuity contract as part of the distribution, they want to know the value of that contract is shown. So it isn't taxable and shouldn't be included in boxes up here, 1A and 2A. And it talks, about whether it should be taxable or not. You have to know what type of an investment it is. If it's 9A, if it is a total distribution made to more than one person, the percentage you received is shown here. So this is a percentage that gets, if the amount is made to more than one person. Life and annuity from a qualified plan or 403B plan. So that's what a lot of these other ones in here, the state and local and everything, that's similar to our other 1099s if you have state tax withheld. So as part of a, let's say, a normal distribution, they have some federal tax withheld and they have some state withheld, then it's very important those show up on the form in order to be given them credit for what's been paid in for taxes. So a lot on the 1099-R. We do see those a lot in practice when we're doing preparation of returns, but it is very helpful to even just glance through and say, okay, what I see something in this box. What does that really mean? And does that make sense? Make sure it passes the logic test, of course.